You want to get? Okay. Can you ask the guard to send me to 16 floor? You know that we have a meeting today. Okay.
Okay, we have all the people online, right? Yeah, hi. Hi, good afternoon. Can you hear me? Can I check, Helen? Can you hear me?
Yes, I can hear you. Hello, Miss Nyang.
Hi. Okay, so I think I see some college from CDB as well. So I think we can start now. So this section, we focus on the balance sheet management, liquidity management. So I would like to introduce to you Mr. Chung, who is the head of balance sheet management and financial market. Um, and he will present on the VP Bank liquidity management. And I think yes, we can start with an overall introduction from Mr. Chung, and then we leave it for you to have a question to Mr. Chung. Yeah.
Great.
Yeah. Thank you.
Yeah. So good afternoon, everyone. Yeah. So I would try to keep it very short, and then maybe a little bit more time for your question. Yeah. So under my division, there are 3 areas, right? The ALM, the FI, and FM. FM is both trading and sales. So this today, I think we mainly focus on the ALM part. I think, yeah. So it's more role responsibilities and what we are doing on a daily basis, right? So basically, the mandate here is number 1 is compliance. We need to keep basically maintain the right liquidity ratios, State Bank of Vietnam ratio, lenders ratio, as well as expectation from rating agencies. Right, so these are the things that we try to keep. Number 2 is we need to also maximize our banking book NII. So basically, if we have a target of 35% credit growth, we have to try to have enough funding and etc. Try to also control the cost of funds for the banks, as well as promote lending to businesses in line with the strategy and the business plan. So our main internal counterparts are the business divisions. Right? Number 1 would be the business, all the business divisions, and then to some extent the finance and the market risk, right, functions. So these are the kind of the key counterparts internally that we work with. We have normally we have ALCO, but we also have mini ALCO. So here we have weekly mini ALCO and we have a monthly ALCO. So that's in the mini ALCO I will chair, and they are representative from businesses, all businesses, and finance in the mini ALCO, and the ALCO will be chaired by our CEO. Yeah. So of course, apart from liquidity management, right, we also have to manage the interest rate risk management. because interest rate risk is certainly also very essential for Vietnam. We have usually quite very volatile interest markets in terms of both, we call here market one and market two. Market one is where we deal with, corporate and retail customers. And market two is more or less the interbank markets and professional lenders. So interest rate varies a lot in between markets, and also fluctuate a lot in the local market, because I think there are lack of a clear intervention from State Bank of Vietnam to assure that there is adequate interest rate level in the markets. For liquidity management, apart from all the regulatory compliance ratio, we have always been trying, at least, right, to maintain a funding buffer. We call it a funding buffer. In this year, for instance, there are times that we had, I think, more than 3 trillion, more than 3 billion US dollar equivalent in funding buffer. I think back perhaps in July. I don't remember the exact time. Yeah, but usually our average funding buffer this year perhaps is well above 1 billion US dollar. The reason for me doing it, even it is very costly for us, but it is for the sake of allowing balance sheet to grow. And if we have a lot of drawdown, and also we have volatility in liquidity as well, right? Then having a big funding buffer always give me the assurance that I can manage liquidity, my liquidity well.
And this is a buffer above what?
Yeah. So normally we will calculate the buffer based on the funding, the equity, available equity, minus all the assets, right? And minus all the liquid assets required to meet a prudential ratio, right? So basically, it's beyond the liquidity, the HQLA required for the banking book management. So this is a true buffer, right? It's not like a liquid assets in a sense, right? What else? I think in terms of that's more liquidity, right? In terms of fundings, I mean, well. So we try to diversify, really diversify and committed to different funding sources, right? So including borrowing from international lenders, even when it was quite expensive for us, especially in the years of like 2024, on mostly this year as well, because Feds keep interest rate very high, right? And we have to pay more than 2% in terms of like of a credit spread to lenders, right? So it always makes this very expensive for us. But this is a mid to long-term funding, which is critical for our funding structure. Yeah, in terms of retail, basically we have different business divisions, but we see in the market here, retail is perhaps the biggest source of funding. So in the markets here, amongst our peers, there are about 60% of funding source from market one only, right? It comes from retail. At the moment, we are about also nearly 60. Our strategy is actually pushing further forward to like 60, 65, but it's very tough. Yeah. So there are banks which have lower ratio, like Vietcombank or Military Bank, because they are state-owned or semi-state-owned. They have a lot of state-owned companies which have high level of cash, and put deposit to them. So So they have a much higher ratio of corporate deposits compared to banks like us or ACB or Techcombank. So ACB, for instance, they have about 70% of more than 70% of their deposit based on retail. Right? Even within retail, we see between ticket size more than less than 2 billion Vietnamese dong per customers is a lot more stable. It's a rollover rate of 65 to 70%. Whereas if you have a customer with 20 billion or 30 billion Vietnamese dong, then the rollover rate can vary. It can go down to like 40% to 60, 70%. Yeah. Likewise, also corporate customers. I must say that in terms of funding concentration, we do have. I don't have the number here, but I think that still it contributes to a small part of our fundings, given that we also have some corporates which put a lot of money with us. But given the size of the balance sheet that we have, it's still significant. It's still a small portion. Yeah. Funding risk in Vietnam generally considered to be high, given that State Bank of Vietnam do not have a real good mechanism to support market liquidity like in the other markets. So this is, it gives additional pressure for us and prudence also for us to manage our liquidity. But like I shared with you, I think 2 days ago, right? It's the same, like, okay, markets fluctuate like this, but in a way, there will be a stable line. But I mean, there is perhaps a bigger variance in Vietnam compared to most of the more developed markets. So if I can say that at the moment, we see the long-term Vietnamese interest rate would be somewhere in between 6 or 6.5%. Let's say a 12-month bank deposits. This to me is a kind of the right number, but the variance is high. So it can be as low as like 4.5, but as high as 8.5. Yeah, so that's making it more difficult for us, but to manage. Yeah, so if we we had a chart looking at the performance of different asset class in the last 3 years. So from Vietnamese dong, US dollar, gold, VN index, bitcoins, and yeah. So perhaps these are the key asset class, and the Vietnamese dong, with the interest rate in the last 3 years, is the worst performing. It's even worse than the US dollar because US dollar appreciate a lot in value against the dong, right? Even US dollar most of the time have a low interest rate, but it appreciate in value, right? And that's the reason why recently we see an outflow of deposits, right? We also have real estate as an asset class, and Vietnamese dong is the lowest performing asset class. Right, and that actually clearly indicates that interest rate for the dong has to adjust, and we saw a lot of the increase in interest rate dong for the dong in the local market recently. But again, right, so things are at the price for Vietnam, in Vietnam. Also, the same with liquidity. So what we saw in 2023, early 2023, is that when we had a kind of mini crisis, end of 2022, then we saw interest rate for dong also in the bank rise to 9%, or maybe even a little bit higher, but most of the time like 8-9%. But then liquidity comes back strongly in 2023. because once people see a parity between Vietnamese đồng performance versus the other asset class, they will come back to Vietnamese đồng. So that's always the case. So I think Vietnamese people perhaps have a strong mentality of trading, maybe a bit of gambling. Yeah. So, but I'm sure that if interest rate come back to 8%, there will be a lot of money coming back to the system.
Can we just clarify with an understanding here? So you mentioned that VND was gross.
Yeah, the VND also and together with the yield of the interest rate.
So meaning is the currency depreciated and the interest was not enough to compensate for depreciation of the currency?
Yeah, something like so. Basically, if we calculate the VND based on the interest rate of the VND, the US dollar will be calculated based on the exchange rate plus the US dollar interest rate.
Yeah.
If let's say we are free to in free market and there's no regime of zero interest rate on US dollar, right? And the same with a cryptocurrency.
Yeah.
Then we just translate it. There's no interest on it, right?
Yeah.
So we just translate the nominal value together with the exchange rate of US dollar. Then we have the performance of a crypto.
But then, would it mean that people would rather try to exchange in US dollar and deposit in US dollars? So just
People can, yeah. So basically, if I am the owner of Vietnamese đồng, I can consider different options. Either I change it into a US dollar, or I buy crypto, I buy real estate, I buy VN index.
Oh. Okay. So actually, to gain deposits was most difficult part because it was less appealing product
Exactly.
compared to all others.
Yeah, and especially in times of major increase in other asset class, like VN index, like crypto, and like gold. Gold is also crazy, right? It has been crazy. Yeah. So, but I'm confident that once the interest rate level stabilized and corrected at a high level, liquidity will come back to the system. Same pattern in what we saw in 2023. Yeah. One thing is, I think that's I can be quite sure is even with the fluctuation of the dollar đồng rates, right? One thing I'm quite sure is the current account of Vietnam. Yeah, it's quite good. So we're talking about export minus imports plus repatriations of profit from FDI, right? And also money transfer from Viet Kieu overseas workers, tourism industries, remittance of outflow from like people with having children studying overseas. So everything, right? Expats here, people living here, spending here, or maybe transfer overseas. So we have a good visibility of Vietnam current account. It's not as good as China sometimes ago, but it's okay, right? But the thing is that if we keep the interest rates too low, then we will see outflow, right? We will see outflow because especially in time when US dollar interest rate was very high. And this is what we have seen in the last 3 years also. So what else should I cover? If you have any hints, let me know. I mean, if you have any questions, just jump in.
So maybe I interject one question here. So the interbank interest rate has been very, very high. The interbank interest rate has been very high, right? But we have not seen significant increase in deposit rate from bank. Is it because the SBB?
It has.
It has, but
it has increased a lot. You don't see it enough in the published rates, but the actual rate has already increased a lot. The actual rate, I already have to approve 8% interest rate today. Yesterday and today, 8%.
Is it 12 months or
6 months, 12 months, I already approved 8% interest rate. Okay, so it has increased a lot. And even retail markets could go as high as like 7.5 already, right? And more like corporate markets go as high as 8 or maybe even beyond already.
Okay.
Yeah, so market respond very decisively.
So the central bank, do you see any kind of pressure from the central bank to keep interest deposit rates at a certain level?
Yeah, so central bank, what they have done in the last 2 weeks is they have two windows, two key windows to basically inject more liquidity in the system. One is the open markets, but for the open market window, you need to have government bond. And government bond yield here is just crazy. Government bond yield here is below 4% for 10 years, right? So having that liquid asset basically put yourself in a big market risk because bond yield keep increasing, and also a very high cost of liquidity. So banks do not hold a lot of government bond here, right? So basically, banks do not have enough government bond to freely do a lot of open markets with central bank. So the second window, which central bank only has been active after a lot of advice from me personally, right, to the central bank, that they do need to do FX swap, right? They were very concerned with do FX swap because they don't want to be seen that, okay, Vietnam, State Bank of Vietnam enable dollarization, enable people keeping US dollar and then swap into Vietnamese đồng. They don't want any public accusation around that. So they have been very conservative, but lastly they did it. Last week, so 500 million. This week, 500 million. Too little. Too little for the market. So the swap market doesn't respond at all to that amount of money. Yeah, but they start doing it. I mean, the good news is that they almost have hardly ever, never have done it before. But now they started doing it. Yeah. Which is a good signal for borrowing, for people who borrow US dollar like us. Because we could also swap with the central bank in addition to swap to the markets.
how much is the swap cost now? The swap rate?
Very low. So basically, the open market operation is at 4.5. The swap market, as per your state bank tenders, it's also about Fed fund plus 1%. Yeah. So it's also like 4.6, 4.7, something. But only for 2 weeks. Because by nature, state bank intervention is of short term, right? But in the past days, they could inject a 3 months money to the market if they sense that the market is lack of liquidity. Yeah. But that's almost window, not yet the swap window.
How long do you expect SEB will continue this cruise swap? And would they continue in 2 weeks when it's mature?
It's mature very quickly, right?
Yeah.
So if you say 2 weeks and every week they do 500, that's altogether only 1 billion. That's very little for the market, and it doesn't help the market at all.
They continue like.
They would. I would expect them to continue. If not, at least at this pace, but if not, then a much bigger amount. I actually call them and already mentioned to them that it should do with bigger amounts. But I know that they have been very conservative. They don't want anyone to accuse them of dollarization. You know, once you swap to the markets, it means that, okay, people have US dollar, people can swap back to Vietnamese đồng. That means you indirectly enable people to keep US dollar, right?
2 weeks, it is nothing. So we cannot create a strategy if swap is for 2 weeks only, or is it just for the most?
No, you can. If you have a clear statement to the markets. The thing is that the SBB doesn't have any clear statement to the markets. If you do 2 billion, let's say each session, 2 billion US dollar. And if you do for 2 weeks, it's a 4 billion US dollar. That's a significant amount. That's what will make the markets. But the thing is, they do only like a quarter of what maybe the markets need. Yeah, and they don't make any statement. If they make a statement, as long as the market need liquidity, I will do the FX swap to the market. That's a different approach. But they don't want to make that bold statement, because this is very political. Meaning that, you know, it's also a sensitive time of, you know, political change, because we soon have a party congress earlier next year, and it is time that, you know, the top political leadership decide on who is the new leaders, who is on the Politburo, who is on the government, in the government, who is going to be the next governor. So everyone wants to be very clean, you know.
Maybe just you mentioned that you have already to approve higher interest rates for deposits. I assume that it is a movement in, because you are one of the leading banks, so it is a movement, a trend in among all banks. This would again mean that your cost of funds are higher, and you would need to transfer to the
Of course,
to the loans, and then it will somehow need to be, so the demand for loans will be less.
Yeah.
Normally.
Okay, that's exactly what I mentioned about the variance. I mean, what I see, the long-term interest rate of Vietnam is, let's say, 6%. But unfortunately, with this kind of management from the State Bank of Vietnam, interest rate keep rise and decrease and increase, you know, at a big variance. And when, you know, interest rate, if you have to talk about saving interest rate at 8%, it means that you will have to lend out at 10% or even more. It means that, you know, it doesn't work economically for many of the business. It will, and then adjust the credit needs from the system. But then we'll see slowly we'll see the liquidity improvement and the LDR improvement in the system. But until then, we have to live with it. But this is the thing that we don't want, actually. We want it to be more stable, more predictable. Yeah. I mean, only it is predictable because we are banker, we are treasurer, we know, you know, the system. But for many of the people, it's very hard for them to do business planning.
So SBB used to buy dollars in order to inject VND, but are they still doing that? And you know
They haven't done it for a long time. I think the last time they did it, maybe as far as I remember, was 2021. 2021. It was when, after COVID, US dollar interest rate was 0, and our market rate was like 4%, 4.5%. So if you see a big gap between Vietnamese đồng rates and the dollar rates, this is the time when State Bank of Vietnam are able to buy, because then money keeps flowing into Vietnam. Right? Then State Bank of Vietnam would perhaps be able to buy currency. But ever since, you know, dollar interest rate went up to 5% something, right? Then we no longer see any net currency inflow to Vietnam. In fact, the financial accounts of Vietnam account balance of payment has always been negative, exception for 2023, because 2023 interest rate was very high. But then 2022, 2024, 2025 always like a net outflow. Hopefully next year will be a better year in terms of in currency front.
What does all of this mean for the interbank assets and liabilities? We already discussed a little bit, right?
Yeah.
But I'm very interested to understand the dynamics there, because your assets, interbank assets and liabilities are close to matched, right? And these are mostly very short term, within 90 days, but probably the majority is much shorter, right?
Yeah.
It's,
So interbanks here, I must say that most of the tenor transacted tenor is overnight in 1 week.
Yes.
Yeah, it goes up to 1 month and 3 months. Repo, in repo transaction, we see more of the 1 month or 3 months. Yeah, but in clean money markets, it's more like less than 1 month.
Yeah.
Right. So that's for sure. So the interbank is more or less used for clearing the needs of having surplus funding. Like I have a funding buffer, then I have to place it within the interbank.
Yeah.
I think it's less in terms of trading nature. Yeah. And the reason why you see in the balance sheet of most banks having very big balance is because actually it's a very stupid reason. I explain shortly with you. So in State Bank Vietnam has a ratio called LDR. It's 85%. It's a limit. In that LDR, you don't calculate any amount of the equity. So like bank like us, having a lot of equity, it means that if we have the LDR of 85%, let's say only market one, so true loan and true deposits, and without any interbank, then we would have so much funding because we have a lot of equity as well, right? So it doesn't make sense for us. So for us, we need to also make use of the funding that's available from equity, right? It means that we have to increase our loans compared to our deposits. But doing that, our LDR, our true LDR will be more than 85%. But luckily, State Bank of Vietnam regulations allow interbank deposits to be calculated under the deposits, but interbank loan not under the loan, right? So that's a trick, and that's why banks have to keep very high balance in deposits. So that's including Vietcombank, right? Every bank. All the bigger state-owned banks have a major issue with the LDR from State Bank Vietnam, and we already have letter to State Bank Vietnam say that please stop, apply this, or maybe you have to include the equity into the equation. But State Bank Vietnam do not want to change; they want to wait and go straight to Basel III, right? But Basel III is even more complex, right? But that's the reason why banks want to keep, a kind of technical transactions. Very short-term natures, and especially over the month's end. But it doesn't really increase their credit risk in the interbank.
So on the excess funding side, I understand, right? But from a liability management perspective, it's also expensive to because you see sort of the positions are sort of matched, right? So if you purely focus on the interbank assets and liabilities, sort of matched, all very short term, right?
Yeah.
So the spreads are very, very thin.
Yeah. So again, interbank is not for trading, unless you do a swap, right? Only for long interest rate trading happen only in the swap books, not in the. Some, but not much in the clean interbank market because it's only for a month and less. And you know, the amount of carry is almost nothing. So no people who really want to play with it. But you know, the main play is actually around the swap markets, and maybe a little bit in the repo markets, where you know, the term are a little bit longer, but then the amount is significantly smaller. Because people generally in the banking book, we don't want, like me, I look after both the trading book and banking book. I do not want them to take a lot, especially outright positions for longer tenor.
No.
It doesn't make sense for me. Yeah.
Is the repo market active here? Because you mentioned government bonds are not really a kind
FI
of
bonds.
FI bonds.
Yeah, some
So the FI bonds are
active, but very significantly smaller compared to the interbank market, overnight clean banking market. But yes, there are regular transactions in the repo markets, but mainly, I think, between banks and the FI bonds, with securities firm and bank, then to some extent also government bond, but to a lesser extent government bond. Yeah.
Are they? You decide what you would say it is repo eligible, or is it the central bank who say it is repo eligible paper?
I think this is a kind of like it's a regulated market. It is already a regulated market. We also have master repo agreements to locally made a master agreement to sign with banks, so that we are trading on in the same terms and conditions.
Yeah, but I mean, who decides the available papers or the bonds of which FI is okay for repo? It's just you, or is it the central bank?
There's no central.
No.
There's no central policies around that. So just we need to have risk limits to take on which kind of papers and how much a haircut. Yeah.
But this would mean that FI bonds and papers are liquid, so you can always trade with them.
Fairly liquid, yeah, fairly liquid. So it's also depends on the tier of those. So if you talk about state-owned banks paper, it's a lot more liquid compared to a small bank paper. Yeah.
But still going back to the interbank, because I'm still not entirely there. I understand it's not for trading, because the spreads are very thin. So from that point of view, and I agree, that doesn't really make sense, of course. But if I look at the interbank assets and liabilities, they are mostly matched, right? And you don't really use the interbank liabilities for funding.
Exactly, this is what I mentioned earlier.
But since they are mostly matched, right, and all short term, and generate very minimal carry.
Exactly. Let's just have to improve the LDR ratio. I mentioned about the LDR ratio, right? Yeah. Without that interbank balances, in my statement or in VPBankS statement, our LDR will reach the 85% of the regulation of regulatory State Bank of Vietnam. The reason is that regulation is not smart enough. Not counting my equity. Yeah. I have a big amount of equity, right? Where I should use it to lend.
Yeah.
Yeah. So that's the only reason. Interbank trading, no sense.
Always.
No, exactly. So, if the LDR definition would change, how would you approach the interbank?
It would reduce significantly.
Yeah.
It would. We would not do it anymore. No. In fact, we have been always under pressure for each month end to do such things to comply. We don't want to do it. And so is VPBankS, the best bank in Vietnam. The same thing. They also have the same problem, having the biggest equity.
Yeah. And is there any interest to increase the size of the balance sheet? Is there any motivation? Because at some point it also inflates the balance sheet, right?
Yeah.
So is there any motivation to have a certain balance sheet size? Because We speak with a lot of,
Maybe for smaller banks.
yeah.
Maybe for smaller banks, not for us.
Mhm.
Yeah.
And why is that different for you compared to the
Well,
smaller banks?
because maybe some smaller banks, they want to show that they have a bigger balance sheet.
Mhm.
So financial strength,
Mhm.
size of balance sheet. But for us, there's no such needs.
But who derives comfort from those smaller banks showing bigger balance sheets? Because if you look very quickly, right? Let's say they have 20% interbank assets and liabilities, right? Because most of the banks have this sort of matched, right? There may be some
I think it's
deviation, but it's sort of
more
matched.
maybe
So
for
anyone
not
looking
for
at-
analysts, right? Not for analysts.
No, exactly. Anyone looking at the balance sheet will say, yeah, but this is
But if you
inflated.
are retail depositors
Yeah.
or corporate depositors, maybe you would care. Or maybe you don't understand about financial analysis of bank statements, and you just say, okay, this seems a big bank, and maybe a big bank is, and it's true as well, right?
Mhm.
Big bank is harder to fail.
It would be fair to assume that no bigger bank use interbank funding to fund longer term loans.
There are, yeah, but I can say, for instance, BIDB recently.
Which one, sorry?
BIDB.
Yeah.
BIDB is a very big bank, the biggest bank
Mhm.
in Vietnam. And they, as far as I understand, because they also have, they are state-owned banks. They have a lot of limits from other banks, right? And their funding position is not as good as Vietcombank. Maybe their ALM is not as good either. So they have been using it. Yeah. So there are some banks. I don't have the whole picture, but I definitely say there are certain banks that use interbanks borrowing as but perhaps they would also have the techniques of extend the tenor. Let's say for doing so. If you say I borrow from you 3 years loan, it's totally different than if I borrow overnight or 1 week, right?
Yes, it's very dangerous.
So where do you think this is heading to? As you said, you're already approving interest rates of 8% on deposits. Interbank rates are probably going to follow, right?
Interbank rates has been stabilized overnight, stabilizing at 7.
Yeah. But they
in the
probably
past 10 days or so.
they follow increasing trend probably.
No, has been stabilizing at 7.5
Yeah.
for the last 10 days.
Yeah.
Right. It used to be like 5% for a long time, but then a quick jump. But of course, always very volatile, right? But it has been, the overnight rate has been surprisingly stable at 7.5% recently. In my view, right, if we have, let's say, 8% deposit rates compared to, let's say, today, Fed decide to cut another 25 basis points, moving dollar rate to 3.5%, right? 3.5%. That's a 3.5% difference between dong and dollar. That's a very, very good cushion for the dong. Yeah. So market will start to realize it is a time to put your asset in Vietnamese dong. Even at a 8% interest rate, stock market will suffer. Real estate market will have some slight suffer. Yeah, 9% is suffer even more, but 8% is already like a strong signal that for any investors into real estate market and stock markets to reconsider. I mean, Bitcoin and gold, they have different drivers from international markets, but the portions of money putting in Bitcoin and coal and gold is a lot less, much less compared to real estate and stock markets. So you see that. In conclusion, I think it is nearing the end of the cycle. I hope that actually state banks of Vietnam would have a better statement, so that make the market confidence. So that's, people don't like crazy put interest rate up, which is very damaging to the economy, right? Yeah, but I mean, in my base case, they won't do anything apart from doing maybe increase the size of the swap. Yeah, but we'll see. Hopefully, in the 3-month times or so, we'll start to see a decreasing trend, because when it impacts the economy, right, business cannot borrow money anymore. Yeah, and it is time for me to manage my interest rate risk. It's hard. It's very hard in Vietnam. We don't have any swap markets, interest rate swap markets. We have currency swap, but we don't have real good interest rate swap markets. Yeah. So I share with you that we make more money in time interest rate go up this time, because my repricing average, the repricing tenor of the liability was 6 months, and my liabilities on the asset side is only 4.5 months. So it makes money for me because my asset reprice faster than my liabilities. But very, very soon, I need my assets to be repricing longer than the liability, or at least as equal. So I have to be very, very much managing my interest rate risk profile in times. To be honest, in 2023, we have some big loss in my interest rate risk banking book because of that. So I'm very aware of that. Whether I can fully mitigate that is another question. Yeah. So I will have my FTP to be very active, to basically steering the repricing profile of the new booking. So right now, for instance, my message to the business, and also I already changed my FTP, right? I prefer the 6 months over the 12 months deposits. Yeah.
Even though you mentioned that you expect that SVB increase the swap volume, then it will not have the increase sharp in the interest rate. But do you believe that there's a level of interest rate, the optimal level, so that pressure on US dollar exchange is not as high as sometime in October, right?
Yeah, you see that's recent with the current interest rate difference, let's say of 3.5%. There's no more currency pressure on the currency front. In fact, 2 weeks ago, we made a quick online conference to our customers, to our corporate customers, and I was the one conducting it, right? And suggesting to our customers, to export customers to hedge their revenue, basically, because we see it is a kind of turning points for the currency markets. If the interest rate is so high, so a lot of customers follow when they do the hedge, right? So Vietnam markets turn very quickly. So in October, as you mentioned, right, or September, a lot of customers go for buy hedge, and now people start to go for sell hedge. Yeah. So yeah, and then you see a lot of retail people who start to switch their assets from dollar to dong. Yeah, in this year or last year, we see sharp increase of retail US dollar deposits because everyone expects US dollar to increase, to appreciate again down. But next year would be a different game.
Clear.
Okay.
That helps. If I can bring up one more topic, that's the liquidity management. And you already mentioned that you keep buffer. But we also discussed yesterday that the LCR, let's say Basel III LCR, is managed very tightly, right? So that levels close to 100% are not uncommon. And also with having in mind that once LCR is implemented, the central bank limit will probably start at 60%, right? So it will slowly go up probably to 100%. So if you manage your LCR 100%, you're still well above the central bank expected initial limit, right? But still, managing LCR at 100% is fairly tight, right? If I'm coming from my international kind of.
I know.
Right. So how do you manage that? But also, how do you intervene if liquidity runs tight, right? Or maybe even if you breach the 100%, because you will breach, right? If you manage it close to 100%, you will have breaches.
Yeah.
How do you manage this?
Okay. So LCR at the moment is a kind of I still consider a soft limit for our internal management.
Yeah.
And there's no regulatory limit on that one. And to be honest with you, if there is a regulation around that, I'm not as confident as maybe our risk people say now with the LCR, because I think there is a major transformation of business activities around managing liquidity. And we have reviewed the first draft of the State Bank Vietnam regulations.
You mentioned this.
Yeah, and it is actually, I mean, I don't have all the details now in my hands, but the team report to me, in different items, is a lot more conservative compared to the Basel recommendation.
Yeah.
So, but of course, banks like us are feeding back to State Bank Vietnam. It's not going to work. It's don't be too ambitious. At least at first you need to get used to it, to a new regime, right? Yeah. So at the moment we have no clear pictures of what's going to happen. The timeline is also unclear to me. Initially they target for 2026, but I think that this is more or less because of political pressure. I think they would extend the deadlines. And to what extent the details of the regulations come out, we don't know yet. What we need to know is we have to be on top of developments. And honestly, from the ALM perspective, we will have to be steering this with all the business of what kind of products, liquidity deposits and liquidity products we need to pursue, what kind of change we need in terms of managing our deposit base, so that we suit more our the new LCR and then etc. So to be honest, I'm not sure, I'm not confident for now, but what we do is we need to ensure that we are amongst the banks that are on top of it and be in front of of the new developments, and to make sure that we change our deposit products in accordance to the new regulations, so that we can take advantage of it. But not confident right now.
So the talks are currently about NCR only or NSFR?
Both. Yeah, NSFR is okay to us. I mean, we both in terms of Basel recommendations and the State Bank of Vietnam draft. It looks okay to us. Yeah, but NCI is a major issue.
Since you're one of the larger banks, you should be able to manage that well, and also you're involved in the discussions with central bank, and you can also steer those discussions.
Yes, we would be. Perhaps my plan is that once we have a little bit more time, maybe I will go to SBB in fact, the one in charge of that regulation, he's living in the same apartment complex with me. So I think him a lot. The other day I just faced him in a coffee. I mean, then I sit with him then for 1 hour to discuss. Okay, but that's like 4 months ago. I asked him. Initially, they want for 2026. I said, but only about 3 weeks ago, then they released the first draft. So we want to be on top of it, definitely, and be prudent. And definitely it's a tougher one and a more real one compared to the current regulations. But current regulation, I think there is a key stipulation. The LDR is stupid, but there are the 30 days liquidity ratio and the liquid asset ratio. There are two ratio which makes sense.
And if NCR and NCI introduced, then other will be removed, or is it?
This is also one of the things that State Bank Vietnam asked us, whether we banks want to replace or just in addition. So our view is replacement.
Does it make sense to keep them, right?
Yeah.
But if imagine that the Basel III would be implemented, just the plain Basel III definitions. What would you need to do?
So Basel III implementation, we would be quite okay, right? We would be quite okay, but there are some recommendation in Basel III that's very difficult to apply for Vietnam context. Number one, I can mention 2 examples here because we went to Basel III a lot of times. So one of the things is that the stipulation requires, stable deposits, has to have, deposit insurance. Deposit insurance in Vietnam is only maximum 75 million, which is tiny amount. And so it means that anything beyond that, whether have a long-term relationship with customers, etc., consider to be unstable deposits, which I don't think is right. So that's number one. Number 2 is the stipulation in Basel III around existing relationships, operating accounts, etc. So I think to implement it in a clean way is very difficult, not easy at all.
But indeed, I agree. But the deposit insurance comes from a mindset where the level is much higher, right? Generally.
But in Vietnam, unfortunately, government doesn't want to insure. But again, Vietnam, right? Whatever bank run you have in the last 20 years,
it's fully covered.
The people who the people money, the people never lose their money.
No.
So there is an implicit guarantee. There's no explicit, but implicit.
Interesting. But I'm sure these elements will be discussed before implementation. Right?
Definitely. We do.
Maybe jumping back to the interest rate risk, there are no prudential norms, so no norms from the central bank for
capital
for managing this risk, right?
There is.
Risk?
IFC also have some, right? Stipulations in terms of managing interest rate risk. State Bank of Vietnam also have, but honestly, I think the risk is much higher than actually what State Bank of Vietnam requires. So we manage it a lot deeper.
Internally.
So let's say you can have easily a 200 basis point move in Vietnam. What does it impact to the whole books? Even if you have only 12 months repricing, the PBO1 may look small, but it's 200 basis points. It can be a big win or big loss of money. So I'm very honest with you. That's we have to be very careful with it. So not just liquidity, but also interest rate risk.
What is the prudential? I wasn't aware that there is a.
I remember there is a stipulation
Yeah.
around basically compare the certain repricing gap
Mhm.
comparison to our capital.
Okay.
So, but generally, it's very easy for us to
Mhm.
meet
Okay.
the ratio.
Okay.
It means that, but in reality, right, the P&L hit to the books can be
Yeah.
a lot bigger.
So the gap on capital, maybe it's manageable, but if the shifts are 200 basis points, then
Yeah,
maybe
or even more, right?
Yeah.
Yeah. Like in 2022, it's more than 300, more than 200 basis points. Yeah. And the thing is, it moves not like in the US, right? It moves gradually. Here is like within 1 or 2 months,
Mhm.
it's already 200 basis points.
Mm.
Okay, the time is also up. And I
If I
hope
can
that
ask
I
one
make
very quick question.
sure.
Have there been any major breaches in your other internal limits? We just discussed the ALCO, right? So are there any other ratios which you have been focusing on because maybe they were tight or there were some breaches or concerns?
Regulation,
Mhm.
definitely no. So far, I mean, the whole time we didn't have any breach because breaching any regulations is it's just look really bad. Not just looks, it have implications on the way if you apply for new things.
Sure.
They will say, oh, you have breached
Scoring.
Yeah.
a regulation here.
Yeah.
So the answer is like here, no.
Mhm.
Right? So it's very, very careful with the regulation breach.
Mhm.
Internal, hardly ever.
Mhm.
But I remember we have reached one time the interest rate. I think the interest rate risk indicator, because I think one of the large drawdown.
Mhm.
Yeah, so I think we have, to be honest, I think one time.
Okay.
If as far as I remember, about 6 months ago.
Okay.
6, 7 months ago.
Thank you.
Okay,
Thank you so much. Very interesting.
Thank you.
thank you. Hope I give you certain assurance of how we manage liquidity and interest rate.
Yes,
Please.
that was very helpful. Thank you.
Thank you.
Cảm ơn anh.
Cảm ơn chị. Một kia thì thế nào?
Đi anh chị.
Thứ ba để nào? Okay. Since the Bank of Vietnam here, we just announced a third swap. Swap
Okay.
now. So this week they will do 2 swaps. At least 2 swaps.
Yeah.
Oh, that's good.
Longer than 2 weeks?
No, the last week
Only
they
2
did
weeks.
500 million. This
Yeah.
week they already did 500 million yesterday.
Yeah.
And today they did another 500 million. So that's together 1.5.
Yeah.
And maybe they will do more. I mean, the key for me is the indication that they will do more.
Yeah.
It will have a lot to stabilize the market.
Yeah.
It's very important for me, I have to maybe no longer approve the 8% anymore. That's what it is, right? Okay.
I just went to bank branch for deposit and the rate is 6.5. So I'm like very surprised. Mentioned like 8%, a huge jump.
Now you know you need.
Days ago, 6.5.
Yeah.
The VP security and transfer.
Now it's time to fix.
I sent you the PDF comment with analysis on VPBank.
Yeah, thank you.
So we
I will
documented
have,
quite thorough analysis, including a legal opinion on VPBank.
Thanks, that's all.
Just to provide you more context.
Yeah. I just want to make a little bit ahead, right? Okay, 2027, right? We will probably incorporate
Yes, I still can
consolidate. Because we, and then we also try to, based on the loan book growth, we can sort of derive what will be the required I think we should quantify It's just a test. But the concept, okay, how much will be needed for 3 years from the loan book growth to support and also what could be the potential requirements for the consolidation. What kind of level are we talking about?
Yeah.
Just so that we can say, okay, this is this.
So let's look at all the, so when they first acquired VPBankS, we did a analysis.
Yeah.
We merged the two balance sheets together.
Yeah.
And the impact on car or component or
Yeah. Now that was an exercise.
Yeah.
But the loan is going to decline further due to the loan book.
Right, exactly.
So we also need to incorporate that to the same assessment.
Right.
So then we have a clear view on what is actually the sort of the requirement, because there is a gap between.
Trong
trường hợp anh cô
Expo không join được thì không, anh Trường join của ngày mai, chiều mai 1:45 em bảo Trường My book cho chị cái lịch đấy.
For
Exactly.
the other one,
Yeah.
subsidiary,
Yeah.
and see on also level, on the capital level.
1:45
Yeah.
đến 2 giờ.
Be required.
Yeah.
But of course, we'll make a lot of assumption on the RWA, you know.
Yeah, but yes, I agree. But at least then we have something to discuss, right? And then maybe we can also
Em sẽ bảo My book
bank and say,
10
well,
giờ.
yeah, we made an assessment, right? It's a back of the end. But we come up with
Đến
a action.
2
Is that something that is
45 phút là 2 giờ
manageable?
30.
Can we maybe get a little bit more
2 rưỡi
comfort that
là 45 phút.
this is something that can be handled?
So like, also the back of an envelope, analyzing based on the current negativity level.
Yes.
All those affairs.
Yeah. Yeah.
So let's say we assume that they're starting with 1 million balance, right?
Yeah.
Because we have 1.2 billion zero interest rate funding line
Yeah.
from the central bank.
Yeah.
So at minimum, they should be able to yield a loan performance of 1 billion, right? Based on this. And then that balance grow by 20% each
Yeah.
year or 1918, whatever.
Yeah.
And the return on asset it should start very high because based on the zero interest rate.
Yeah.
And then it start to kind of average down, right? Because the
anh Điền vào chưa?
line is fixed at 1.3%. And then the ROA will start to normalize
Yeah.
to the normal level, which we still put it much lower than the bank level.
Yeah.
Sometimes like 1.8
Yeah.
or 1.9, 1.5.
Yeah.
Looks like it's gonna start breaking into 6.
Mhm.
Conservative
Interesting.
conservative calculation, back up an envelope calculation.
Yeah. But that means if you consolidate and step to 27, then you will still
Yeah.
have a significant
They
gap
still
to
have
bridge,
to
right?
say absorb by 400
Yeah,
million
exactly.
negative equity.
Exactly.
So if you put like 1 million equity, it will
Anh Điền có bật đấy không?
half, maybe 1%.
Bảo rồi em ơi.
Hi, good afternoon anh Điền.
But then we also
Can you hear me anh Điền ơi?
maybe the growth is
I can hear you.
per year.
Okay. Yeah. Anh ơi, so let me quickly introduce. We have a due diligence meeting with IFC, SMBC, DEG here on the ground in VPBank office in Hanoi, and we also have some colleagues from CDB, the China Development Bank, China Exim Bank, Probaco is all on the line. So I think we can start now. Could you present some of the business strategy and of the VPBank security? Thank you, anh.
So Hiếu, can you share the file? Can you share the presentation?
We have shared. Can you see the screen now? And we have already shared.
Not yet.
Anh ấy vào đúng đường link luôn đấy.
Đúng không?
Yes, sir.
Em stop rồi, share lại rồi.
Okay, I can see it now. So can you please move to the second slide?
Second slide.
Yeah. Mm.
So Mr. Dian is the CEO of VPBankS Security. Yeah.
Right.
Yeah. He's based in Ho Chi Minh City, so he just joined with
Okay.
us
Yeah.
virtually. Yeah.
Fantastic.
Yeah. So good afternoon, ladies and gentlemen. So I'm the CEO of VPBank Securities. I joined the company since July last year, and it's almost 1 year and a half. So we just complete the IPO, and tomorrow we're going to list on the main board, Jose. So
Yeah.
here are a number of key points that we'd like to update you. So on the agenda, we want to update on the operation, organizational structure. So I think let's move to the next slide. Yeah. Okay, this is the development of VPBank Security over the last more than 3 years. So we acquired a small broker in 2022, and then we recapitalized into one of the biggest broker in 2023 with 15,000 billion share capitals. And then in 2024 and 2025, we pull together a quite strong team, and we developed our business to cover most of the business line for the brokerage and investment banking. And then in early 2025, after we, have been building a good foundation for the company, and we also integrated well into the group model with the banks and ecosystem. Then the market condition also were quite favorable at the beginning of the year, so we decided to expand our business quite quickly. So you can see that by end of the third quarter, we had total asset of 62,000 billion, which is more than 2.5 times bigger than the end of last year's. We also gain quite a significant position in key business line like margin lending. We became the top three in investment banking for debt capital market and equity capital markets. We also ranking in top three. We also make quite a good profit for the first 9 months of the years. Then we rank in the top four for the first 9 quarters. And our number of accounts for brokers also increased quite sharply. It's more than double during the years, and right now we have more than 1 million account with backup close to 10% of the market share for the number of account for the total Vietnam stock market. Thanks to very good performance for the first 8 and 9 months of the years, and take advantage of the very good condition for the stock market, the banks, and also the board directors of VPBank Securities also decided to go IPO, and we complete the IPO in a record time frame. It's just 2 months. And then we raised $480 million through the IPOs. And we already complete the IPOs around a month ago, and we also prepare for main board listing, Jose. And tomorrow's will be the first day of trading for VPBank Securities, and we price the share price at 33.6 so that's 33.9 thousand per shares, and at these levels the company is valued at 2.4 billion US dollar market cap. So move to next slide. So this is the organization chart of the company. So you can see that we organize into the functions, the department. So I think above the CEO, we have committee like other companies, and under the CEO we have internal control and also some council under the CEO. And then for the operation, we have business division, product development, research center, investment banking centers, treasury department, marketing and communication, human resource, legals and compliance, risk management, financial and accountant, and also operation and information technology. Right now, we have around 900 staffs. We have the headquarters in the same office building with VPBankS on the 25 and 21st floor. We also have one branch in Ho Chi Minh City, also on the same VPBank towers, and we also have a transaction department in Hanoi, in the center of Hanoi. Move to the next slide. Later last years, we roll out the group model where we cooperate very well with the VPBank and ecosystems. We define 9 areas in the middle and back office where we can share service with the banks like HR, finance, legal, marketing and communications, and also others, like IT, internal controls. The group model had rolled out since the beginning of the years, and we not only take advantage of the experience that the bank had built over the last 32 years. We also cooperate with the banks on business side as well, like the investment product distribution, like bond distribution and fund certificate distribution. We leverage the system of the banks and ecosystem with 30 million clients to sell investment products through to clients. We also link the app with the banks that we offer the service to the banks. And in the future, we are going to upgrade the WealthTech platform with investor clients from the banks and from the security company can use service with each others. In the ecosystem, we not only work with VPBankS, but we also work with like VPBankS, with OPES, and other company as well. On the investment side, we have 10% stake in the insurance company OPES, and we also have we are going to invest 11% in the crypto exchange called Kai. So next slide, please. Okay, so
To
here you
interrupt.
can see
Hello,
this is
sorry to
the four key basic areas that VPBankS focus on. So now, number one, investment banking. We cover both debt capital markets and equity capital markets. So the deal size for debt capital markets in the first 9 months is 14,500, where we see around $600 million US. For the investments, we have quite a diversified portfolios of bonds, private equity, and liquid equities. On the margin lending, as I just mentioned, we grow very fast, taking advantage of the market condition in the first 9 months. So we quickly became the top three in terms of margin lendings. We have advantage in margin lending thanks to our capital base and also thanks to our ability to borrow from very diversified sources of funding, including local banks and also international lenders. And then brokers, we follow a hybrid model where we have traditional broker. We also leverage on the ecosystem from VPBankS, but we also expand through partnership, not just VPBank, but other partnership like fintech company as well. And then we also have brokers, shell agent, and we have digital brokers for savvy investor who can do it by themselves by going to the app and web to do the service by themselves. So we cover many segments of the brokers. So those four business lines are the four pillars for the growth of the company this year, and we do hope that it will be the core business for us into the future as well. Next, please. This is the banking, investment banking basic. So you can see it's split between equity capital markets and also debt capital market. And then we for debt capital markets, it cover quite a diversified group of clients. They are property, but in our case, it's not just residential property, but industrial park and hospitality as well. Then we also have manufacturing, and we also have like service company and mining company, and then and fintech company as well. Next, please. So here you can see that one of the key pillars of our investment in investment banking, especially on debt capital markets. So you can see that right now the non-bank corporate bond make up only 11% of GDP. And the government do expect that it will become 25% of GDP by 2030s. And I think right now we make up around 15, close to 15% market shares. And for this bond capital markets, as you may know that in the past, the bank can do, can join into the value chain of the bond issuance. But right now, but since middle last years, the government, issue a number of regulation and, they ask that the bank not allowed to do so, but all of that will transfer to the security company. So security company now can do the whole value chain for debt capital markets, starting from advisory, underwriting, distributing, investing, and also managing others, and also providing others service for the whole life of the bond. That mean that only big security company backed by a very robust and dynamic private banks can have advantage in this business, because this business require large capital. This business require leverage as well, the ability to borrow, and this business rely on a cross distribution networks. So typically you only see that a few big security company backed by the big private banks like Techcombank Security and Techcombank, VPBank Security and VPBankS, Bank Security and Banks naturally have advantage in this business. That's why we just joined the market recently, but we quickly become the top three in this markets, and we make up close to 15% market shares. You may know that 3 years ago, after the Saigon Commercial Bank crisis, then the government had tightened the regulation on the bond markets, and that's already by in middle last years, almost everything already in play, and it show the problem of the bond markets, and the bond market become quite healthy now. So the last years and the first segment of this year is the first time ever when we see that there are more demand than supplies in the corporate bond markets. So what they had done, they as I mentioned, they restrict the bank from investing in the bonds. The bank can only invest in a few type of bond. They divide the investor into professional investor and non-professional investor. Only professional investor is allowed to invest in the private offering bonds, etc. So that's why the bond markets already escaped from the crisis and going up quite healthy recently. So with the strong position and strong advantage in the bond market, we do expect that we will maintain and even increase our market share to 20% by 2030. And not just the market share, you can see that the size of the bond markets as percentage of GDP increase from 11 to 25% over the next 5 years, which offer great opportunity for us as well. And then as I mentioned, we have advantage in this type of business, so we're quite confident in this. So next, please. So here is the prop book trading. We have typically 4 types of investment. So we have 4 strategies, but I mean, for the purpose of classification, we can split it into 3. So the number 1 strategy is M&A. M&A strategy, it can be divided into sub-strategy, like very strategic investment in OPEC or CAX, and all the M&A. We invest 5, 10, the 15% stake in a company, and then we build value for them, and over a few years we sell it and get a nice returns. Typically, in those cases, we have downside protections. And then we have PI. PI means private investment in public company. We combine this with our investment banking advisory service. We just did it recently in a deal called KBC. This is one of the leading industrial parks. We advise for the company, and we know how good they are, and we also participate in the deals together with our investor. The deals, although this is a listed company, but the deal is private placement, so it locked for one years, and we participate at a nice discount to the markets. And for example, right now, we have a nice return of 50% on the investment just over less than 6 months of holding. But we can only sell it next year, for example. That called Pi, and we want to invest in Pi in the future if we have opportunity. And then listed stock can divide into a single stock picking and also portfolio investment. We typically don't see it as a very regular investment, but we only actively invest in listed market where we see there are opportunity. So this year, clearly, the market offer a good opportunity for us. So we also took advantage to invest in listed portfolios and make some money on the listed portfolio as well. So the portfolio investment is also quite important for us, and we have quite diversified portfolios. So please go to next page. So not to mention that the portfolio investment, not just equity, but also for bond as well. Bond, we have corporate bond, and we have government bond, and we have CD as well. Then go to margin lending. Margin lending, as I mentioned, we have advantage of big capital base. We have advantage of mobilizing capital from banks and also from international markets. And our cost of funding is quite competitive to the market as well. To our peers. For that reason, if we offer the same rate like our peer, then we can get a higher NIM than our peers. Given the advantage in the size of capital and also the interest rate that we offer to the market, we quickly win the market shares. So right now, our margin book is over 30,000 billion, which is around 1.3 billion US dollars. And we became the number 3 in margin lending just after a short period of time. We see that we still have natural advantage in this business, especially after we did the IPO successfully. So after the IPO, right now, our capital base, our owner equities is already number 2 in the markets. I see that there's some big broker also increase capital, but I think that by the end of the year, maybe we in the top 3 in terms of owner equities. Thanks to the IPOs, our debt to equity ratios reduced sharply to just 1 point something, one time only, and that's offer ability for us to borrow more in the future to service the margin lending, also bond investment and also equity investment in the futures. So next, please. Propers, you know that we just a 3-year-old, more than 3-year-old company, and this markets already have 26 years of history, and we know that getting market shares is a very key KPI for us. But because we are late commerce, so we need to build it, consistently. So by the end of last year, we have 1.6% market share in wholesale. But for now, right now, we have 3.2% market share, meaning we double our market share in 1 year. And we gain bigger market share this year together with SSI, but SSI gain market share through their institutional clients. We gain market share mainly through retail clients. So this year we gain more than 1.5% market share. So we do hope that if every year we gain 1.5 to 2% market share, then by 2030 we will have around 10% market shares. And with that percentage of market share, we do hope that we become the top 2 or top 3 player in the markets by then. Next, please. So this is the summaries of our core our 4 pillars: investment banking, margin lending, brokers, and prop tradings, prop investment. You can see that we have quite high growth rate for all of the business over the years. Next, please. So this also illustrates some key financial indicator like cargoes for our operating revenues and pre-tax profit growth, and also cost to income ratio. So we control cost to income ratio quite at a low levels. We do expect that in the next 5 years we still keep it in the rank of 20 to 25%. And one of the key indicator we see the return on equities. Traditional brokers tend to have a return on equities in range of 10 to 15%. But we do hope that we would maintain a return on equity in range of 15 to 20%. In order to get a higher return on equity than our peers, we do need to leverage and integrate well into the group models, especially on the share service, and also keep also the distribution of our investment products. We also need to leverage on the banks so that the bank can help us to borrow from local banks and also international banks at the quite competitive interest rates. And we will need to maximize the ability that we yield capitals for our key activity that yield capital. For examples, in the banking sector, we have capital adequacy ratios. In the security sector, we also have a similar ratio called capital safety ratio. And that capital safety ratio also regulates the way that we use capitals. But it's also different from the banks. For example, the margin lending is not part of the formulas. So we can take advantage of this to expand margin lending where we see we can manage the risk in order to improve return on equities. And we can also try all the activity like the treasury activity. And also others, the derivatives activities where we have typically higher return on equity, like future and cover warrants. We are building up those business as well. So we would maintain the return on equities in between 15 to 20% in the next 5 years. Next, please. So here is not only the ecosystem, but the bank network that we have. Right now we have a relationship with over 20 local banks. The total credit line that they granted to us is 35,000 billions, and we have a yield full of that. We also rely on the very good cooperation with SMBC. So SMBC just recently, lead the syndication loans of $200 million for us. And the deal, just roll out. So thanks to the ability to mobilize capital from local banks and also foreign banks, we have quite a diversified portfolios of loans with different with diversified duration as well. Because if you just rely on local banks and local bank just give short-term credit to security company, while foreign bank can offer a longer terms. So that we have quite a diversified portfolio of loans with the diversified duration that help us to manage the risk of liquidity better as well. Next, please. So here we summarize the products that we have. You can see here we have quite a diversified portfolio product from margin to e-stock, e-bond, e-future, etc. So next, please. And we also roll out the private WOW as well. So the bank have private banking. We have private WOW. So private WOW not only serve the wealthy clients in the security company, but we also cooperate with the VPBankS to serve the private banking client as well. We have two flagship, one in Ho Chi Minh City and one in Hanoi, in the same area with private banking with at VPBank. For this segment, I think the bank have more than 630,000 diamond clients and 2,000 private banking clients, and those clients have more demand for stock and bond investment. So we cooperate with the bank to serve those clients as well. Next, please. So this is just the candle to serve clients. So I think we don't need to go into detail. Next, please. This is the area that we focus on as well. We are one of the very first company brokers that offer AI advisory service to the markets. And we work with a fintech companies to make Stock Guru. Stock Guru is the agentic AI advisor that can help our investor to do technical analysis, fundamental analysis, financial analysis, macro analysis, and also evaluation as well. They are the most intelligent AIs in the sectors. Next, please. So on on the platforms, we are young, but we have been building up our platforms, especially this year. We invest heavily in ITs and AIs. So this year, we spend around $8 million for IT, and in the next 5 years, we do expect that we can spend 3 to 5% pre-tax profits to invest in capex for IT. Right now, we have 180 IT staff, and next year we do expect to increase the number to 260, making us even right now say the top three brokers that had the biggest number of IT. We aim to turn our company into a fintech company. So we try to digitalize all the process. We try to apply AI and new technology to the operation. We recently building our order management system. We can offer the order management system to sophisticated institutional investor. We also have our new fund office, and we also offer API for our broker, for our client as well. Next, please. So here, as I mentioned, we pen out the plan for the next 5 years, and the key indicator in not pre-tax profits. We aim to grow a CAGR of 32% for pre-tax profit through 2030. We would like to control our debt to equity at a reasonable level as well. As you can see, the debt to equity by the end of the year is quite low. After we complete the IPO, our asset also grow very well. So by the end of the year, we do expect that the total asset 81,000 billion, 81.5 thousand billions. If you compare to last year's, by the end of that last year, it's just 26.7 thousand billion only, which means the total asset already increased by 3 times over years. Then the return on equity, as I mentioned, we still try to improve the return on equity quite significantly over the years. The reason that the return on equity dropped in 2026 because we just received a big amount of capital, and it takes time to improve the efficiency. Next, please. So here, this is market share that I already mentioned. The in terms of progress, we would achieve 10% by 2030. And all the business I already mentioned. So I don't think that we want to go deeper into it. But for margin lending, we do expect to get 15% market share. We now already have around 10%. For the debt capital market and equity capital market, we do expect that we get around 20% market share as well. And derivative trading, we also get 20% market share by 2030. Next, please. So risk management, we have quite a strong teams in managing the risks. In the past, we focus on key risk areas which relate to our key business line like margin lendings, debt capital market, etc. But since after we integrate into the group model, then we follow the group models and cover all type of risks as well, even information technology risk and other type of risks as well. So we basically roll out the model from the banks. And the bank help us a lot on defining risk, managing risk, mitigating risk as well. We're going to increase the number of staffing in the risk areas so that we can cover all type of risks that you can see here. So we're shifting the model from monitoring managing the key risks in key business line. Now we cover all type of risks. You can see here like capital adequacy, operational models, integrated risk, information technology, legal risk, market risk, credit risk, liquidity risk, which are the key risk area which the bank also follow. Next, please. Compliance, and you can see that security sectors, like the banking sector, is highly regulated industries. Even when we are an unlisted broker, we do need to follow a lot of reporting requirements, money laundering, everything. And now, after listing, we become a listed company, and we need to comply with regulation on listed company as well. So you can see here that we do need to comply quite a lot of regulation and laws, and we the bank also help us a lot in terms of those key risk area as well, like money laundering, KYC, FATCA, etc. Next, please. So this is the ecosystem that I just mentioned. So the VPBank now the biggest private sector banks in Vietnam. The growth of the common of the bank, the parent bank, and the ecosystem have been enormous over the last few years, and that also help us to grow our business as well. Next, please. So here, I think where we also already mentioned on the key indicators with the notes that for the whole years we sign a number of contracts that borrow up to $400 million from international lenders. Next, please. So this we also mentioned, so I think we just skip it. Next, please.
This is final slide.
So this is just the introductions of the companies, and I think if I want to summarize, I can summarize. Then I would note that number one. This years and also previous years, we have built up the foundation for growth. So this year we accelerate, taking advantage of the markets. We grow all types, including the scales, the balance sheet side, the side of margin lending, the bond investment. Very very big time this years. So we became the top 2 to top 5 in most of the key area that we're operating. We took advantage of good market condition, especially for IPOs, and we successfully raised $400 million from the IPO at quite a good valuation. We have built up our key business line, the 4 business lines. We take advantage of new technology like AI, especially agentic AIs, and technology in order to build up our platform so that we can scale up in the futures. We integrate well into the group models, and we take advantage of the group model for borrowing, for distributing our investment products. So, say by the end of this year, although we just less than 4 years old, we become the top three to top 4 biggest brokers in the countries by many aspects. So I think this is a summary. So we will open up for Q&A, and my team and I will answer any questions from you. Thank you.
Thank you, Martin. I think you still have question. Yeah. Okay.
Why margin lending? I mean, margin lending is inherently very risky, right? And you need to have basically investor need to be sophisticated and also very educated. And given the capital market is very volatile, it's very, very risky. Why you should margin lending as one of the growth driver?
Again, can you hear the question here?
I cannot hear clearly. Can you say again or repeat
Yeah.
it?
The question regarding the margin lending.
Yeah.
Can you say it again?
Yes.
Sorry.
Yeah. I see the question now. As I explains, in order to win in the margin lending, you need a number of advantages. Number one, you do need to have a big shareholder base because the margin lendings they kept at maximum 2 times own equity. That's number one. But clearly our own equity is not using for margin lending. We use for other purpose as well. So the second advantage is that you only can expand margin lending if you are able to raise capital, to borrow capitals with a diversified duration and big scale. So the security company, not a standalone security company like traditional security company, don't have this advantage. We have this advantage. So that's on the capital side and borrowing side. But I mean, margin lending, it also rely a lot on the experience. I mean, it using a lot of investment skill. Investment skill here meaning that you will need to loosen margin lending or tighten margin lendings depending on market condition. If you loosen the margin lending when the market at the peak, meaning it's very highly priced, then you have very big risk. But if you roll out the margin lendings when the market is still at a low valuation, then you are fine. You can protect the risk very well. So our margin book by the end of last year just 9,500 billion, and only in the years we decided that this year is very good years. And we offer quite a number of products. We restructure our distribution network. I mean the hybrid brokerage model that I just mentioned. We offers more fees to brokers so that they can get more clients that trade the shares, and when they get more clients, meaning the demand for margin lending also increase. We offer quite a competitive interest rate to the market as well. So that's why you can see that the margin lending not just increased recently, but it started increasing at the beginning of the years. So it increased every month, and now right now we have more than 30,000 billions. And if you look at the structures of the margin lending portfolio, you will see that we lend mainly to blue chip. 50% of our portfolio are lent to VN30 stocks. VN30 meaning the 30 biggest blue chip stock in Vietnam. And if you split it by, if you break it down by sector, then 50% went to banks and security companies. I mean the financial sectors. They are very high risk and low risk company as well. So I mean, this we have all advantage, also experience for doing this business. Not to mention that before I joined VPBank Securities, I spent 24 years with Dragon Capital, which is the biggest fund manager in Vietnam, and I run the biggest fund called Covale, and also a member of ECOS. So my past experience also help us and the team to grow the business as well.
Maybe sorry, maybe I phrased the question wrong, but I mean from the customer side. So I mean the investor has to be, let's say, have the certain education level in order to trade this. Do you have any mechanism to, let's say, protect the investor that they trade in the area where, I mean, do you have any, let's say, maybe risk appetite assessment for this kind of investor that they are not have enough knowledge to actually trade using margin lending?
Yeah, our investor can be divided into 3 groups. The first group is very retail investor, very small investor. They trade quite often. They use margin in short period of times, and then they sell the stock and they pay back the margin, and that make up around 1/3 of our margin book. The second group also make up around 1/3. Big investors, they trade quite aggressively, and they also have quite a very good discipline in managing the margin lending, margin borrowing. Then the last group is the big institutionals or individuals, but they are linked to the owner of the company. Of course, you know, they not the insiders by law. They borrow. They don't trade quite often. But they also use margin lending, margin borrowing, but that just limit to a number of big company only. So I think the retail investor tend to be quite driven by the market sentiment. But the first group of retailers, they buy and they borrow and they sell, they pay back. But the active traders, we have quite a large number of active traders as well. So the amount that they maintain is quite stable. So because the last pay of investor, and the first and the last group is the one who blow to the companies, they tend not to trade very often. I mean the margin borrowing, of course, rely on the market situation. You see that during the market went into downtrend on the liquidity screen, then our margin lending also get impacted. But I think in general, we have advantage in the business as compared to our peers. So that's why we are able to expand our margin book quite sharply, taking advantage of our experience well. One thing that I would note that during the last year and also this years, although the markets have been quite volatile, we suffer from zero bad debt. We don't have bad debt. Even during the time where Trump levied 46% tariff on Vietnam, the market nosedives by almost 20% in 2 week times. But we had no bad debt. This is because we have a quite robust system in managing margin lending. We're starting from the list from the government around, and we narrow down this to around 300 stock only, and we have our research risk management to build out the indicator for margin lending for every stocks. So I mean, we have quite a robust system in managing margin lending.
Question online from Paul.
Yes, we have a question from Helen Probaco on the line.
Yes.
Yeah.
Thank you so much, Mr. Dean, for your presentation. It was very comprehensive. I have some questions on crypto assets. So at the very beginning of your presentation, you said that there is a dedicated subsidiary for crypto activities. Is that right?
Yeah, the crypto activity is led by the group and ecosystem. We participate 11% in the crypto exchange.
Okay, so it's the participation of the group in crypto entities. So another question is, what is the strategy of VPBank, of the group, in crypto assets in 2026?
I think this question should be for VPBank, right?
I think your VPBank Securities is managing a crypto pilot project. I wanted to know more about that pilot project, and if you can tell me more about the strategy going forward.
Yeah, this business is not under the under VPBank Security. It is from another company under VPBank ecosystem. But I can check and share with you more detail, because I don't want to elaborate further something that I am not really fully understand. So maybe I get back to you on this one. But
or
it
maybe
is
I
from
can
another
address this question. Chị Nga is Hạnh speaking.
Hi.
Can you hear me? Yeah.
Okay.
So I think like for the thing related to the digital assets, so like for our group, we see that it's like a really like potential industry for VPBank, and we are also like among like the 5 financial institution is can do the pilot. So I mean like so we also like have our subsidiary VPBank Security to join hand and also like contribute the capital to establish the CAX is the digital assets exchange, And I think like also our CEO also share in the roadshow for VPBank Security IPO, we see that this is an opportunity for us, one of the leading financial institution in Vietnam, to stepping in. And also we currently we also like in the active discussion with several well-known organizations to learn from them, because like for the digital exchange, some of the key thing is first is the regulation, and the second one is like how to maintain the security of all of that system, and the third one is in terms of technology. So that is why like we are still in the active discussion, not only with the well-known organization that's in this area, but also we also like, work with the government and even like other like leader in the market to learn like how to do it like appropriately. So I mean like at the moment is what we can share right now, and we hope that like maybe like in our AGM we can share more details on this matter.
Okay, thank you so much.
Maybe one question. There was a quite critical inspection report with regard to the bond issuance. I don't know whether this question is related to you, but maybe you would be the right person to answer. There were also some naming of VPBank. So can you maybe elaborate more what was the reason for this critical inspection report, especially use of proceeds, wrong advisory? Can you maybe give us your perspective on this report?
I think let me correct if I think that this is the inspection from for VPBank, not VPBank Security on the bond issue and for since 2021 or 2018.
2016 there is a
2016. Yes.
17, yeah.
Yeah, and I think next week we organize a separate section with legal team online, and to give you update about the outcome and what our reaction, our action internally, and also respond to the requirement of the SBV and regulator on this issue.
Okay.
Yeah. So I just want to make sure that the right team, I mean that the legal team will be in the right position to give you update on this part.
Okay.
Okay?
But this is also related to the activities now with VPBank Securities, right? So I understand this report related to VPBank.
For VPBank,
and
you suppose
looking
it.
forward to the call next week.
Yes, that's right.
However, topic-wise,
FI bond.
Topic-wise, I think it is definitely a topic for VPBank Securities because they advise, they underwrite. So maybe to phrase it differently, after this inspection report, what are the lessons learned and impact on VPBank Securities, how to deal to advise properly?
Yeah.
Well,
Fair question.
as I mentioned earlier, so there a regulation change on bonds, and basically the bond business is now transfer from the bank to the security company. We also work very closely with VPBankS for the areas that we may cooperate with VPBank, like collateral management for the bond issuance, for example. But since we are now the ownership of the bond value chains. So we, since last years, the group also assigned us that we do need to lead the whole value chains of the bond. So we have been building up our our management, our regulation, our process on the bond issuance and distribution to be sure that we comply with the laws. I think one of the areas where the government pays special attention to is the purpose that you use for capital and the documents that we need to comply with the regulation. So in terms of the bond markets, we have quite a robust system as well. We have the investment banking advisories that focus on that capital markets. We had the bond investment team. We had a bond distribution team. And also we have the back office team that do the job like managing collaterals, like representative for the bondholders, and then doing depository as well. And we have our internal controls that do audits on the key basic areas, like the bond is one of our key basic areas as well. So we also focus on that, and every issuance we need to go through a team, including the risk management team, the legal and compliance team, and we have many layers in terms of approval as well. The approvals at the level of the investment committee at the banks, and also if that also relate to if the client also relate to the parents, then we also have the approval from the board of directors from the bank as well. So we have quite a multi layers in managing the bonds. And we know there will have more investigation into the bond market in the future. So we have been preparing well for this.
So I think the question is about the use of proceeds. So do you have anything? You do anything differently in the advising of the bond issuance, as well as how you manage the cash flow of the bond issuance into the right use of proceeds? Yes, that's the question.
I think the difference between the bank loans and the bond is that when you lend from a banks, then you can manage the cash flow in more details. And in case of security company, after we issue a bond, then we also monitor the use of proceeds. So that's the purpose of the bonds. To be sure that we qualify with we meet with the regulation, but I would note that the issuer has responsibilities in using the proceeds that regulated in the investment memorandum. What we need to do is that we need to be sure that at the time that they issues every document that they provided to us is checked and verified.
Thank you.
And then I have one question regarding the bond portfolio that VPBank Security is holding. I see that it's a trading portfolio, but it also a significant portfolio. And do you have the kind of communication and discussion with the VPBank team? Because, for example, VPBank also lend to that group of clients, and security company also buy corporate bond, etc. So the total exposure on consolidated basis will be very big. It may exceed the certain limits of the bank on consolidated basis. So how is the cooperation? Yeah.
Yeah, so as I mentioned, we manage the risk through many layers. So we define the big group of issuers, where not only for the bond issuance but also for margin lending, because they may relate to the margin lending business as well. And they are the one of they are in the top borrower from the bank as well. So when clients it belong to that list of big clients that they use service from both security company and the banks, then we do need to report to the banks and to consolidate the position so that we can have a clearer picture on how we are and how the bank other group exposed to the client as well. So in the past, we did it like, when we had a client in the group, then we need to get the permission from the banks so that we can set the limit for a single client or group of clients. But recently, we are moving toward a so-called the approval process, where the banks also participate in the approvals of clients where both can have exposure, to be sure that we can manage the risk in its own totality from both the bank and the security company as well.
Okay.
I have maybe one final question from my side. You mentioned you have to comply with a lot of requirements, but I haven't seen law on credit institutions there. If I look at your activities, there are a lot of activities similar to the banks, so margin loans, investment in bonds. Is it covered somewhere else? Is it covered in the law for security companies? In the risk management section, you mentioned that actually you have nearly the same risk management as the bank has, but no requirements to comply with the law on credit institutions. How does it work?
I don't really get your questions.
Yeah. Your activities are very similar to activities of a bank, especially with regard to the margin loans and investment in bonds. So on your own risk, so in your own book. However, I haven't seen laws which you have to follow law for credit institutions, which I would assume it should be true for you as well, but it is somehow not. So I wonder where all the requirements come from, because what you showed us under the risk management, there are very bank similar. But I wonder what is the requirement? Yeah.
Yeah, I see your question. I think this is a very, very good questions. I think that this is because it's related to the way that the government manage the the uh, the sectors. So in the past, the bond sectors belong to the bank. The bank can do everything.
Yeah.
And also the margin lendings. The bank can lend to stock borrower as well. But recently, the State Bank of Vietnam changed the way that they define the risk and then they manage the risk. They want to ring fence the banking sector from anything which is not called to the monetary basics. I mean the mobilization and lendings, which are the core basic of the banks. That's why they issue a lot of regulation saying that the bond issuance, the bond activities now is not the job of State Bank of Vietnam. This is the job of Ministry of Finance. This is the job of State Security Commission. Also for margin lendings, they define this. This is the activities relating to the stock markets, and it should be regulated by the State Security Commission. The bank limits the total exposure to stock lendings, but it's not margin lending. This is giving loans to investors not backed by security as collaterals. To my understanding, a limit at 5% of the total loan books. So having said that, there are a number of consequences for such a regulation change. Number one, the bond basic and the margin basics became the biggest basic of security company, not the banks. And the security companies, you so call it brokers, now become investment banks, not just broker. So we define ourselves as investment bank, not only brokerage company. So you can see that we have a lot of activity relating to the investment bank, like that capital market, equity capital markets, not only advising but also investing. Then we're margin lendings, etc. So I mean, this is the way that the government manage the markets differently. So they want the monetary markets operate independent from the capital markets, and the capital markets now also manage the not only equity but also bond. Margin lendings is the key basic of security company, not the key basic of the bank. Is that answer your question?
Yeah. Yeah. So, but why then you have to comply with capital adequacy ratio with all the risk management requirements? Because you are a subsidiary of a bank, and the bank needs to consolidate you, and therefore you need to comply with all these requirements.
We ourselves don't comply with the banking regulation. We're not regulated by State Bank of Vietnam, but because we are a subsidiary of VPBankS and we are consolidated into VPBankS, so the bank asks us to follow those regulations, so that when they have a consolidated P&L and balance sheet, they comply with the regulation.
Yeah. Thank you, Mr. Lin. This answers the question. Okay. Thank you.
Thank you.
Yeah.
Thank you. Can I ask one clarification question? The maximum lending ratio for the margin loans, I wasn't entirely clear if I got that. So what is the maximum lending ratio? 2 times.
The total margin book as percentage of owner equity is kept at 2 times. Meaning if you have 10,000 billion owner equity, you can lend up to 20,000 billion.
Is that not very high? I'm not entirely clear on the standards here, but to me it seems very high because I'm aware that normally this is much normally this is kept at much lower levels, right? Is this not very much above the market?
I think until now I don't see. I think up to 2 times is the maximum level. But I say that there are just a few security companies that reach that level, especially the small security company. The average ratio for the industry right now is just 1 time only.
And do you have an internal limit to keep this somewhere below the 2 times?
Sure. I think right now, after we do IPO, then the ratio is less than 1 time. We have more than 33.5 thousand billion, and margin book is now 30,000. We think that we feel comfortable managing it in a range of 1.5 to 1.8 times. We don't want to give it up to more than 1.8 times. I think typically we want to manage it at 1.5, but depend on situation, we may allow it to go to 1.8.
And did you have to make significant?
I meant I just would like to emphasize again that we only feel comfortable to lend to blue chip high liquid stock only.
Yeah.
So I read the news and there was a note that you received a fine in September for 2 violations. The first is for disbursing funds to client to purchase security not listed in the permitted list for margin lending. And the second is for providing lending products to customer without prior reporting or approval from FSC. So do you have any, remediation plans and also compliance plans for these kind of violations?
Yeah, as I said, the security industry is very highly regulated industries, and every year we receive many investigation team from not just State Security Commission, but also the Vietnam Stock Exchange as well, for the issue that we got fined recently, they are minor issues, and the amount that we got fined is also small, and that did not interrupt any of our activities. The remedies that we have for a number of mistakes that they mentioned, we stop it doing what they what they measure, what they write in the reports, so that we quickly comply with their regulation. In fact, I mean one of the sorry, one of the very common issue mid-tax that the government, the SEC security company defines are you offering interest to investor so that they can keep money overnight. But I think this is a very specific regulation by Vietnam government. You can see that market elsewhere. This is common practice. This is not something that will go again with the common practice in other markets. But in Vietnam, the government restrict on this. So after we received the government team and they also point out some mistake, we quickly correct those mistakes and then we are fine.
Thank you, Anh Điền, and I'm sorry that we just overrun this section while we have our FA management team is on the line. So maybe if you have any further questions on VPBank security, can you have send out to our FI team, and then we can give you the clarification later. And thank you, Anh Điền. Thank you, Anh Điền, very much for your presentation. Thank you, Anh.
Thank you.
Thank
Any
you.
further question, we will direct to you.
Yeah, thank you. Bye bye.
Yeah.
Bye-bye.
So we are now we have our FE credit a management team, and our colleague is on the line. Hello, chị Nguyệt. Hi, Maxim. Can you see ourselves?
Yes. Okay. In FE we have the full management team here. Myself is the CEO of the company, and we have Nimi is the deputy CEO. We have Martin is a chief risk officer. Matthew is a head of digital channel. Harry is a head of product, and we have Hoa is a head of asset liability management. And full finance team here, we have a CFO, Mr. Nam. Nam's quite like joined us recently, but today he will present for the company to present overall FE and walk you through high level of like FE performance in the last several years also.
Yeah.
Okay. Then if you have any specific question related to each areas, our representative will respond.
Yeah. Okay, thank you, chị Nguyệt, and the team. I just want very quickly to introduce to you that from the VPBank office we have the representative from IFC, from DG, and SMBC team, and on the line we also have some representative from some bank, including China Development Bank, China Exim Bank, and Probaco. Yeah. So I think to save the time of us together, so please go ahead with your presentation, chị Nguyệt. Thank you.
Okay. Yeah, good afternoon. Can you hear me?
Yes. Yes,
Yeah,
Nam ơi, okay.
Yes, okay. So as delegated by the CEO, so I'm pleased to share with you about the FE credit, about the financial plan, and also about like our performance with the business strategy. Next slide, please. Okay, to contractualize our current position, please look at like our evolution, which is that like you can see that it's divided by three steps, three distinct steps. The first step is that it like first phase from like 2011 to 2014. We executed a land grab strategy in which that we establish our license and also like become like the leader, the market leader. And up to 2014 is that like our loan book is achieved like 12 trillion, and the second phase from like 2015 to 2020, we call it like acceleration. In which is that like we dominate the markets with like over 50%. It is called as like digitalization and professionalization. And we also subsist to launch the UBank is like during the year of 2019 and 2020. Is introduce the ecosystem of the whole FE. And 2021 is like the year that we remark with like the strategic investment from NBC with like 49% as our strategic shareholder. And you can see, you can know that like 2021 is like the year of COVID and the year, and 2022 and to 2023 is like the post-COVID, in which is that like we facing with like the pandemic and also the economic shipping. Year 2023 to 2025, you can see that in the slide. So it is a year that like we become like full digitalized lender in the market, and we also with the involvement from SMBC, and with the strong support from VPBank, we have restructured our business. So we're not just like a finance company, but is that we also work as like to cooperate with the customer and also embedded ourselves in the customer life cycle. And we have like serving active 64 million customer actively, and we achieved like service like the total of 50 million customer. Yeah.
Sorry, this was in 2023.
Yes.
And what are the latest numbers?
The latest number?
Yeah.
The latest numbers that based on our like we serve around nearly 17 million customers. Then the active is around 4.7.
4.7.
Yes. Then the inactive is considered like bad loan customer or bad debt customer is not considered as our active customer.
Okay, can you go ahead, please?
Okay, can you move to the next slide?
Okay.
This slide that like to show you that like how big our distribution network and the range of the diversify of our product. So the most competitive advantage of FE is our distribution network. Why we are aggressing with the digitalization, we also, our physical presence throughout the country is unmatched. You can realize that like we have about like 13.5 thousand POS and across 32 provinces and with more than 600,000 sales staff. Yeah. And the collection team is that like we have a total about 3,000, in which that at the field we have about 2,000 people, and tele collection we have about 1,000 people. And in the slide, you can see that like starting from 2025, so we started with like the ecosystem partner, in which that this is like a new initiative for us to expand our business. I will share with you later in detail about that one. And from the product perspective, you can see that like our product is across all of the channel. We have the two-wheel, we have the two-wheel loan, we have the consumer durable loan, we have the personal loan. This one is really like a diversified our product that help us is not to rely on any single stream. Next slide.
There's also a quick clarification here. So there's 13.5 thousand POS and 6,000 staff. So how does that work?
Actually, we have 4 key sales channels. We have a POS sale channel. Is that the traditional one when our pupil is at there at the every single point of sale, and we have around more than 13,000 is a kind of like partnership with the dealer, and we call POS. And we have a direct sale channel, POS sale channel. One is that we cooperate with the big retailer in the market, like a Mobile World or APTs. And we also have our sales representative at the POS to offer product to our customer. Then we have around 2,000 sales there. And we have the second channel is a direct sale channel. That is the strongest model of FE, that we have a big direct sale network, around 2,000 sales across the country. And they also play a role as a facing customer role, the customer facing role. They meet customer directly at the areas and cover more than 34, right? Nearly 50 province across the and now it's a reduced 34 something because the new structure of Vietnam. And we have a telesale. We have around 1,000 telesale and the digital channel. That is a 4 key sale channel, distribution channel we call, or sale channel.
Thank you.
Can I maybe ask you also a question? How do you differentiate yourself from VPBank clients? So I understand underbank and mass. So you have partially same products, so credit card and also maybe personal loans. How do you divide the market between you and VPBank?
Then I have to share. I have to share with you, right? Our name is a FE credit. FE means that fast and easy. And our NDA of our company, that is a fast and easy. Then that is a good point, right? When you approach and offer customer easily and faster, that is a make like competitive advantage compared with the bank. Then have to say that 40% of our segment is a bank segment. But like when we join as a group perspective, how to identify as the boundary, and we know exactly who is our customer and what is their demand and what's the need, what is the right product and service we offer to them. We base on the income.
Yeah.
Yes.
Income threshold, right?
Yeah. Sorry?
Chị go ahead.
Okay, then we base on income. Then if customer with the income higher than 15 million dong is around $700 or $500 to $700 is it belong to bank, but below that is it belong to us. We target customer with income from $300 to higher.
Okay chị ơi, yeah, clear now.
Okay, so this slide to introduce to you about like our organizational structure, which it is like demonstrates our robust governance of the organizational of the company. You can see that we set like clearly three line defense, and with a separation of duty. Together with like the duty that we also have like operate a strong and disciplined governance framework with some specialized council, such as like the risk committee, the ANCO, and also the anti-fraud, as an example. And this council is run on a discipline on monthly basis. that help us to address like timely the business issue and make the decisions quickly.
Okay, let I put some point into this. Actually, we operate for like after restructure, we have to do that aggressive restructure program since mid of 2023. Then we our strategy change focus more on the sustainable and quality growth, and the risk and compliance is our key focus. Then you can see that all the committee, why we have so many committee. We need the committees that is a decision making party or decision making body of the company. All the key decisions will be made at the committee when to ensure that subject matter expert they have a voice and they have opinions on the key decision, to ensure that when whatever key decision made, we have enough information to ensure that it's transparent and somewhat mitigate the risks. That is the first thing. The second, you look at all our committees, half of it is a focus on compliance and risks. We want to focus on the qualities, we want to control the risks, we want to focus more on compliance. Then that's why we operate the committee and more focus on that to ensure that meet with our strategy for the quality growth. Okay, now.
Yeah. Okay, can you move to the next slide? Yeah, the next one. Okay. So turning into like the market environment. So during the first half of 2025, the non-bank consumer finance loan is growing at like 12.8% year on year, and the NIM is keep stable. And if you look at like the chart on the left hand side, on the top left hand, so you can see that the evolution is quite matched with our evolution that I mentioned earlier. The market, the year-to-date growth of the loan book for the whole market is about 3.8%. And in the right-hand side, that in the top right-hand side, that you can see about the move of the NIM and the yields on average loan and also the cost of funding. That is quite stable. In which is that like the NIM for the whole market is about like 18%. And why that the cost of funding in the last couple of years is stable at about 6.5 to 6.2%. Competitive landscape. So FE credit, we retain is our market leading position. And you can see that like we account for like 20.8% of the market share. And looking at like the loan book, we are almost is double the second player in the market. Next slide. Okay. This slide is a proof of our restructuring in which that I mentioned to you earlier that like during the year of 2023 to 2025, it is like the year of restructuring. With the collaboration from with the strong support from VPBank and MBC. So we have restructured our business. Some key pillar is mentioned in the slide, in which that we synergy about our ecosystem. We lean our organization at the structure I showed you before. We improve the employee performance with the engagement. We also enhance our digital capability. We build the agile culture within the organization and fostering the collaboration across the units. Risk and collection control is always our priorities and key pillar of our business. With the restructuring, the first 9 months of 2025 is proving our work like quite a positive result. In the first 9 months, we distribute about 37 trillion, which is grow about 20% compared with the same period last year. The year-to-date credit growth rate is 4.1%. You may recall that like from the previous slide, that is about 3.8%. Our NPL, non-performing loan, is maintained at like is controlled at 15.2%. while the CIR is improved. It's from 30.3 in the last year to 26.6% in the first 9 months. And the NIM is maintained at 20.2%, is enhanced compared with the last year period. And PBT is achieved 5.7 billion in the first 9 months. Yeah. So this slide is showing our financial projection from 2025 to 2029. It's also show our historical from 2020 to 2024. You can see here is like it is the financial roadmap. It depicts like a V-shape recovery, especially after the year 2022 to 2025. As we mentioned in earlier about our evolution, it is a year of recovery, and 2027 to 2029, 2027 moving forward, it is like a growth. So in the previous slide that you can see that in the first 9 months that we achieved 17 billion, and we forecast for the full year of 2025 at 715 billion. 2026 is that we expected the PBT, the net profit, profit before tax, is achieved like 1.2 trillion, and starting from 2027. We expected the PBT is going to be grow at like 4 trillion. It is time to the as I mentioned earlier that like the year from 2023 to 2025 is the year that we reshuffle our business, and it's a massive clean up the balance sheet. And from 2027 is that we back to normal and growth. From the financial ratio, we expected that the net margin is maintained at 20 to 21% in the coming years, and the cost to income ratio is maintained at 26 and 25%. Yep. Can you move that? Okay. How can we achieve like the top line growth? So the slides demonstrate is like our strategy for the top line growth. The key theme is about the quality profitable growth, and we focus on 5 pillars. The first pillar is about the cross sell and the top up growth strategy, in which is that we will double the sale volume while cutting the cost acquisition by 50% throughout the data analytics. The second pillar is about the new customer acquisition. We build a multi-engine customer acquisition model. And one of the things that we mentioned earlier is that we will leverage about like the end-to-end ecosystem partner, in which that we provide like a finance as a service model. The third pillar is about our digital lead growth. So we expected that like to achieve at least 30% of total customer acquisition through the digital channel. And the fourth pillar is about the collection and recovery. We automating and digitalizing the recovery, and we reduce the credit loss and improve the efficiency. Customer experience and improvement. We transform the customer experience from the cost center into like the loyalty driver. Yep. Can you move to the next slide? Yes. In parallel with the strategy in growth, the top line, we also have to maintain our control and on our risk management. So the risk framework have overhauled, and now we utilize like a mix of automated credit scoring and also with a dynamic policy rule. And there is 2 key metrics we have introduced. The first one is about the lifetime loss rate. That help us to ensure the long-term profitability throughout the lifetime of the customer. And the second metric is about the tax and pilot ratio. This one is that to limit like about up to 10% of our book. That's to cap our exposure to when we're entering into any new segment or any new market. So you can see that we are quite prudent. We're taking a prudent approach when we entering into the market. Yeah, the next. Funding and liquidity. Sorry, yeah. So to support the asset growth, our strategy for the year 2026 and 27 funding strategy is that like we want to ensure that the stability of the fund. For 2026, we expected that like the funding is about like 70 trillion. That represent about like 22% growth rate. And you can see here that like the structure. So we're reducing our reliance on the short-term certificate of deposit, our CD, and we're shifting to the structural with a stable term deposit with a low liquidity risk. For the offshore market, actually in here that like the key priority is that to develop the offshore funding and relationship. We will actively seeking exploring the syndication and the bond issuance is during the year of 2026 and 2027. We maintain like the interbank or like the money market borrowing at like 45%. That's as a short-term liquidity management. And with the support from VPBank and NMBC, we're confident that we can secure our capital or our cost of funding at like a competitive rate. Yep. Yeah, group model. There is a question is that like how we get support from the group or how we leverage the expertise from the group. The slide is made is quite simple, but it's that like we do have like a unique competitive compared with the other with the support from VPBank and NMBC. In short, is that we divided into three pillars. The first one is about the platform and the ground. It's all about like IT, HR, risk compliance, finance, and ALM, in which is that we leverage the expertise from the group, from VPBank, and with the NMBC as well. From the know-how, we also learn the experience and also the product and distribution model from VPBank and especially from NMBC. With the expertise like with the knowledge and expertise in the other area like Thailand, Indonesia, and Philippines. Business opportunity. NMBC and VPBank is a big group in both in Vietnam and Japan. We will leverage the relationship from the group to expand our partnership with the affinity account and also like exploring the ecosystem from the client and the customer from the group as well, like from both VPBank and NMBC. Yeah. So this one is conclude. My sharing is about FE credit, financial and strategy overview. So now is that I'm leaving to the Q&A session.
Okay, thank you, Nam. Ready for you for some questions.
Can I ask about the funding mix in terms of tenor? So the majority of the current funding comes from SMBC and VPBank. The rest are the interbank market.
No, no.
Corporate.
Yeah, we have a corporate
Yeah,
market
so like 2/3 coming from, maybe 2/3 coming from VPBank and SMBC, right? And the rest are corporate and FI. So just to understand in terms of the tenor mix, yeah.
Actually, we focus more on the tenor 6 months and 12 months, and the rest we focus on 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 the interbank on the interbank market.
So can I understand if the funding from VPBank and SMBC would be mostly less than 1 year, 3 to 6 months?
For SMBC credit line, we take 1 year, and for VPBank, we take less than 3 months.
How about the tenor of your corporate deposits?
Tenor corporate deposit focus more on the 6 month tenor and 12 month tenor.
What are the credit costs? We saw the NIMs, but what are their credit costs at the moment?
Credit cost for which segment?
Risk cost. You go to the slide.
No credit.
No,
There is a 15.3%. I think in the previous slide.
It's in line with the market, as you can see in the slide, that about 6.2 to 6.5%, right? Credit cost.
Credit cost.
Not cost of fund.
Not cost of fund.
Do you mean the risk cost?
Yes.
The risk cost depends on each product, right? Differently.
The whole portfolio. The whole portfolio.
Yeah, risk cost for the TOI is around 20% or something, and if that is a question, average. But it's, as Ms. Nguyen said, it's depend on the product, so it's differ by product.
So you don't have it for the entire portfolio?
Oh. Wait a minute.
Of course, we have it.
Because you track NIM, right, on portfolio basis, and you track cost of funds.
We track everything in a very detailed manner. It is just unfortunate situation that we didn't put that on the presentations. Just let me go to the materials and I will get you the risk cost. Because we track it mostly on more granular level depending on the product, but you would expect the risk cost to be at the level of blended average and the
into 60.
Yeah, so up to 16%.
Up to 16%.
Yes.
Okay, and how does that compare to, let's say, the previous year end?
We're slowly decreasing risk cost comparing to, I mean, we're on the second year of 2050 is the second year of decreasing the risk cost.
Thank you. And can I ask for a few portfolio specifics? And I'm not sure if you have the aggregated numbers, but maybe just for us to understand, what is the average tenor, average ticket size? Or do you only have those in individual product numbers?
Yeah, so we track it individually because the products are very much different. So
yeah.
If you take a consumer durable loan, which in terms of the number is dominant, you will see tenors
a 9 months average. But if you go to the cash loan or credit card equivalent, would be 36 months. But so that is 36 is contractual, but the actual is 24 months.
And are these
ticket sizes for cash loans for new customers would be below $1,000. For existing customer would be slightly higher than $1,000, and for consumer durable loans is gonna be something like $400.
Okay, thank you. And are these loans amortizing or in bullet?
Amortizing.
All amortizing.
Yeah.
Okay. And the two-wheeler loans are collateralized, right?
No.
No.
Not collateralized.
No.
So all of the loans, the entire book is clean, on clean basis.
Yeah. Unsecured.
Is there a reason why the two-wheeler loans are unsecured?
There is a reason. That's number one, is not a market practice. Number two, process is complicated, require notarization of the contract, and it's not like feasible.
Okay. Okay. And has the average tenor or average ticket size, have those been increased significantly in the past year or so? So have you made
no? So ticket size. If you take new to bank cash loans, actually is on a slightly decreasing trend, so it's not increasing. And tenors we experimented in 2024/25 with for our low segment customers and low risk and medium risk segment customers with extension of the tenor to 60 and 48 months. But we stopped the pilot for the medium risk, and as of now, we only allow for the low risk customers 60 months tenor. Everything else is 36 or below.
Okay, that's very helpful. Thank you. I have one final question. Have you made any significant changes to your underwriting rules or your models?
Yeah, we do that. We do that constantly. So at the beginning of every year, we have a risk appetite statement in terms of the credit quality. We have an risk appetite statement for the lifetime credit loss. And we are targeting from the risk perspective, we are targeting that value. So and we keep correcting the portfolio to be below the target. As of now, out of 5 products, 3 are below and 2 are slightly above the risk appetite value. And we keep constantly modifying. Every month we are coming to the risk committee with some correction of the policy. And if the scoring model require revision, we have monthly monitoring process for the quality of the model, and we keep renewing them and deploying new models if they require like deployment.
That's clear. Thank you.
Maybe also one question from me goes in the same direction. So you mentioned this restructuring phase, and you mentioned various aspects of this restructuring. One of them was lowering the risk of your clients, if I understand correctly. Can you maybe elaborate more on this topic? So what is now different with regard to the client type? So what was before COVID or during COVID, and what is different now?
If I understood the question, because your voice was not clear, you're asking what is the difference in the profile of the customers before and after COVID?
Correct.
Right. Right. So we technically are, as it was mentioned before, we're now targeting only the segments which are profitable in terms from the perspective of this lifetime loss rate. So we trim the risk appetite down, and that's I think the main difference. If you ask the specific profile, it's kind of like in terms of like target population, it did not change. We still target mostly blue collar segment, but because of the change in the risk appetite, so strengthening the requirements, our rejection rates are now much higher than used to be before the COVID. If you take like cash loan perspective, we used to be in approval rates of around 50%. Now we are below 30% approval rate. So we reject significantly more.
And reject on
the credit, on the scoring, on the like credit assessment, on the risk ranking of the customers, to be precise.
Okay. And if you would go now in the scoring model, what has been adjusted in the scoring model, which parameters?
That I will not tell you. Nobody knows that. That's apart from the members of the risk committee, nobody else knows what's in the scoring model.
Okay.
What I can share with you is that they all are compliant because there is no compliance requirement in Vietnam. Unlike other markets, regarding there is some requirements regarding equal treatment and all of that. In Vietnam, that does not exist, but we also don't use such characteristics which would be treated as illegal, let's say, in Europe, or not proper, let's say, in Europe. So we don't use those.
So just understand correctly, you actually see that just as a user of the scoring model, that your rejection rate is much higher.
I don't understand the question. What does it mean as a user of the scoring model?
Yeah, you say, so you would not disclose it to us, only management knows it. But you see the rejection rate is much higher than it was before.
I know perfectly what is the scoring model, but in order to maintain the integrity of the assessment, we are not sharing the specific characteristics of the score models, right? So we will not tell anyone what is inside of the model, what are the characteristics used, what is their like a predictive power, what is the weight of evidence of this, and anything of that. So that is only shared when the decision about the implementation of the model is made by the risk committee. This all values, this are parameters of the and characteristic of the score model, they are shared, right? And apart from that, we don't disclose this to anyone. So we know perfectly what is in the scoring model, but we don't share it with anyone. And we are not only the users, but we are also building the model. As of now, we have more than 10 score models applied on different stages of the customer life cycle, and we build them all and we monitor them regularly, so we perfectly know what's inside. Your question was like, what was the change between pre and post COVID approach to the customers? I'm telling you that the risk appetite was trimmed down, meaning that the company does not accept the other way around. Customer accepts lower level of the risk as of now, and therefore we reject more customers, and we reject them based on the credit risk models.
Thank you.
I just want to ask one more question. Is the entire underwriting for all products, is that automated, or are there also segments which are underwritten manually or partially manually?
Good question. Thank you very much. For consumer durable loans where the ticket size and the competition is higher, there's mostly auto decision. For cash loans, it's mostly manual decision. So like automated decision is like auto reject, but like there's very limited segment of low risk customers which is gonna be auto approved, and there's gonna be very large gray zone which is directed for the manual underwriting, phone verification, video verification to be executed, and then the decision is made.
Yeah, sorry, that's for the cash loans or for the consumer loans?
For cash, for consumer loans, most
okay,
of that goes automated, only based on scoring, face authentication, and verification of NID, national identification document.
Yeah, got it. Thank you.
Sorry, so can I check the college on the line? Do you have any question?
Sorry, maybe just to clarify, because I was looking back.
Sure.
So the cash loans are mostly manual, right? But the cash loans are actually the smaller ticket loans, right? So the consumer loans are mostly
the other way around. The other way around. Consumer durable loans are small ticket loans. Cash loans are higher ticket sizes loans.
Oh, okay. Yeah, got it. Thank you.
Okay. So
you don't have any questions.
No, this was it.
Yeah. Marina, okay. Yeah.
Thank you.
Very clear.
Chị Nguyệt and FA team, thank you so much for your presentation today. So we can close this section now. And I think if any further question, if we receive from the lender, really need your support to more clarify later on. Okay. Em cảm ơn chị Nguyệt và các.
Okay. Thank you.
Thank you very much.
Thank you very much.
Thank you so
Thank
much.
you so much.
Yeah. Bye bye.